Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button on your bottom right. And once you're done with that, you can definitely make sure that you leave your comments on the comment section. And once you're done with that, you can definitely make sure that you also tell your friends to watch this video, to like this video, and to also subscribe to this channel. And this will help us to be able to grow as an online learning community. If you're in Hammarskrall, I'm pleased to let you know that Y Education SA is hosting some contact lessons that are taking place at Tusanang Daycare Center next to Mabuatlo Primary School. And all you have to do to become part of us is to pay a once-off fee of 100 Rand. And from there, you'll be expected to pay 250 per subject per month. So if you want to become part of us, on your first month you're going to be paying 100 Rand of registration plus 500 of the 2 subjects that you would have chosen. If you want to join us, you can get in touch with us by using the contact details that will appear right on the screen. If you want me to become your online tutor, I'm pleased to let you know that Chauke Tutorials is hosting some online lessons that are taking place on a daily basis. And all you have to do to become part of us is to choose a subscription that is suitable for you, pay it, and then request your lesson. Once you are done with that, we will be able to give you the lesson of your choice. On online lessons, we only have 3 packages that are available, and you can choose any of the packages that I'm going to mention. Package number 1, it's only 350 per month, and you'll be getting 2 online lessons that are recorded as they occur. So you pay 350 per month, you get 2 online lessons per week, which are recorded as they occur. Package number 2, it's only 250 per month, and you'll be getting 1 online lesson that is recorded as it occurs, plus 1 pre-recorded lesson per week. Package number 3, it's only 150, and you'll be getting 1 online lesson that is recorded as it occurs per week. If you feel like online lessons are expensive for you, I'm pleased to let you know that we also have got contact lessons that are also taking place on a weekly basis. And if any of these options that I'm going to mention are suitable for you, please choose it, pay it, and get in touch with us so that we can be able to make your academic problems a thing of the past. On package number 1, it's only 450, and you get 2 contact lessons per week. Package number 2 is only 350 per month, and you get 1 contact lesson per week. Hi there, welcome to the new lesson of the week. In this episode, we're going to be looking at how to complete the asset disposal account. I'm not going to show you the impact on the vehicles account as well as the accumulated depreciation account. If you want me to take you through that, you can make sure that you book your lesson using the details that are available. The lessons can be provided to you online, in contact, or even through a pre-recorded lesson like this one. Prices will be available on the description of this video, so please make sure that you go through those that information that I've provided, and also make sure that you get in touch with me by using the details that are currently displayed right there on the top at the screen on your top right. So please make sure that you use those details to get in touch with me. With that out of the way, let's get into the lesson of the day. So here, what we're supposed to do, we're actually expected to complete 3 accounts: your vehicles, your accumulated depreciation, and your asset disposal. And most learners struggle with the accumulated depreciation account and the asset disposal account. So I thought, you know what, let me just focus on the asset disposal account so that I can at least maybe try and give them an idea of what they are supposed to do. So for now, when you complete the asset disposal account, you're going to need a number of things that you need to look for in the information that you are provided. But for now, let's go and look at what we have. So here, what we know is that the opening of the year, our balances, we're supposed to start our year on 1 June 2004. So meaning that the year will end on the month before June, which is May. If you come here you'll realize that they're telling you that you need to balance or close off all their accounts on 31 May 2005, meaning that this is your closing date. Okay, this is the year end, so you need to know how to identify the beginning of the year as well as the end of the year. So because we are focusing on the asset disposal part only, we need to go to the information that tells us Ukuti there was a disposal of an asset. Okay, so here they're telling us that depreciation is calculated on book value method. I think one thing that you also need to know is the alternative names for this kind of method. So, you know, diminishing balance method, book value is the same thing. So you need to make sure that you know the alternative names that they use. Okay, if you see book value, you see carrying value, or a diminishing balance method, know Ukuti it means the same thing. Don't panic. Apply what was taught to you. Okay, let's now do what we're supposed to do. So here they're saying on 30 September 2004, one of the vehicles which originally costed 140,000 was sold for 100,000 on credit, and this vehicle was originally purchased on 1 March 2003. If you look at this information, you're going to realize that we don't have the accumulated depreciation at the beginning of the year for this particular vehicle. So it means that we need to calculate our own accumulated depreciation from the beginning. So for now, what we can do is to just enter information concerning what we have. We know that they're saying that they sold on 29 September, right? So we're going to enter that information here. So in the side, remember, we're going to debit asset disposal account by the vehicle. So we're going to have 2004. Let's just check the date to just confirm. Yes, it was sold on 2004. So we're going to have 2004 September. Enter the date and every information that is necessary. Let's check how exactly on which day. Here the day is 29, so 29 you can just think about almost at the end. Okay, so we're going to have 29 here, and then we're going to have vehicles, and then we're going to have the general. Remember, when you do the double entry principle, you're saying that you're going to credit the vehicles account, and then you're going to debit the asset disposal account. This is what we are actually doing. If you go to the vehicles account, you will realize that on the credit side there's gonna be asset disposal by the cost price of this vehicle that we are currently selling. Okay, so for now, in this vehicle needs to get out of the business by the cost price. So even in the asset disposal, we're going to show it by the cost price, which is 140,000. So we've shown the first part, which is very important. So we've dealt with the part that affects the cost price. Let's now also look at the manner in which it was sold. Remember, they're saying that it was sold for 100,000 on credit, so meaning that we are dealing with debtors control here. So here on 2004 September 29, we're supposed to have accumulated depreciation on vehicles, and then have that total here, the total accumulated depreciation of the vehicle that we are supposed to sell. We're supposed to have its total here, but for now we don't know that amount, so we're going to put the next thing that we know. 2004 September 29, we're going to have debtors control here, debtors control, and this information is from the general, and they're saying that we sold this for let's check the amount. They're saying we sold this for 100,000 on credit, right? So we're going to have 100,000 here. I'm trying to not rush so that I don't lose you guys, because I know that some of us, we understand things differently, so I'm not gonna be that fast. So now let's start with calculating the accumulated depreciation. Let's check for the first year. Remember they said this vehicle was bought on, maybe let's write the information. Our financial year is 1 June 2004, right? So we're working on 1 June 2004 to 31 May 2005. And then this vehicle that we're talking about, the cost price is equal to 140,000. And then depreciation is 10% per annum on book value. Right? And then they say that the purchase date was on, it was bought on 1 March 2003, right? It was bought on 1 March 2003. So meaning that we need to go back to the financial year that affects 2003 to be able to get our correct accumulated depreciation. So for this year, we need to put that financial period. Remember, our year starts on, meaning that here our year, to accommodate this period when we bought it, it means that our year started on 1 June 2002, right? And then ended on 31 May 2003. So this is the first financial period, and we know that the cost price is 140,000. So we're going to have 140 multiplied by the rate. The rate is 10 over 100, and then the period, the time, will be from March to May. So it's gonna be, think of it in this way, it's going to be March, April, May. So it's going to be 3 months in the first financial period. So we're going to have 3 over 12. Okay, so let's have that calculation quickly here. So we're going to have 140,000 multiplied by 10 divided by 100, and then multiplied by 3 divided by 12, and then we're going to get 3,500. So this is the depreciation for the first year. It will become accumulated depreciation for the following year. It will be the opening accumulated depreciation. In our first financial period, we're not gonna have accumulated depreciation. We're just gonna calculate on the cost price because we don't have anything on that. So the next period will be 1 June 2003 to 31 May 2004. Okay, so now the carrying value changes, so we need to get the carrying value here. So here the carrying value will be 140,000 minus 3,500. Let's check how much we get in. 140,000 minus 3,500. We're getting 136,500, right? 136,500. So this is the carrying value that we need to calculate on. So the depreciation for this period will be 136,500 multiplied by 10 over 100, and then multiplied by 12 over 12, and then we'll get how much was the depreciation for that particular year. So 136,500 multiplied by 10 divided by 100 multiply by 12 divided by 12. We're getting 13,650, right? So that's just for the second year, remember. So when we continue for the period, this means that for now, total accumulated depreciation to date is equals to the sum of this one plus 3.5. So let's get the sum. So this one, 18,650 plus 3.5 will be our total accumulated depreciation for now, which is 17,150. Okay, so we need to make sure that our information is correct. So for the period, next period is 1 June 2004 from here, and then to 81 May 2005, right? Let's check when was that particular asset sold. We need that information to know exactly when it was sold. Here they're telling us that it was sold on 29 September. So meaning we're going to calculate from June until September. Okay, so let's go back to our calculations. Remember, it's 2004, and then that financial period will fall here. September 2004 is covered here, so we're going to move from June to September. So it's going to be June, July, August, September. June, July, August, September. So it's 4 months, meaning that we're going to calculate the accumulated depreciation on 4 months. But remember, we must subtract, we must take the cost price and subtract this. So we're going to have 140,000 minus 17,150, and then we will get our CV. Let's check how much are we getting. So 140,000 minus 17,150, we're getting 122,850, right? As you can see here. So that's our carrying value. We need to get the depreciation for the current month. So we're going to have depreciation is equals to 122,850, and then we say multiply by 10 over 100 multiply by 4 over 12. The reason why we're saying 4 is because we're going to say June, July, August, and September. So it's 4 months, right? So let's get how much is that particular depreciation. So 122,850 multiply by 8 multiply by 10. Okay, let me just cancel. 122,850 multiply 122,850 and then multiply by 10 divide by 100 multiply by 4 divide by 12. We're getting 4095. So for that particular year, the depreciation is supposed to be 4095. But remember, we're looking for accumulated depreciation, so meaning that we're supposed to add 17,150 to this. So total accumulated depreciation is going to be 17,150 plus this one 4095. Let's check how much we're getting. So 17,150 plus 4095. We're getting 21,245. 21,245, right? That's the total accumulated depreciation. When this vehicle leaves, it must leave with this accumulated depreciation. So we're going to take it to that part that I was showing you. We're going to put it here, 21,245. And then we need to be able to determine whether this was sold for profit or loss. So what are we going to do? We're going to check which side is big, which side is small. Okay, for now I can already see that we're going to have loss on sale of asset. You can already see that it doesn't balance. So this means that we're going to have the bigger side as the debit side. So we're going to have 140,000 here, and then even here we're also going to have 140,000. And then here on the 2004 September 29, we're going to have loss on sale of asset. Remember, this is shown in the general journal. So if you check the difference between these two, is going to give you that loss. How much will that loss be? So let's check. Let's take 140,000, and then we subtract 21,245. We also subtract 100,000. We're getting a loss of 18,755. So it's going to be 18,755 here. And then that's how you are supposed to complete the asset disposal account. So knowing how to complete this requires you to be able to know how to calculate the accumulated depreciation. If you look at the marks on that question, you will see that accumulated depreciation is taking most of the marks, and then you see it's 25 marks, meaning that a lot of calculations are here. So for now, let's confirm if our workings were really correct. So if we say for us to get the carrying value, I can remember carrying value is equals to cost price minus accumulated depreciation. So our cost price is 140,000. If we minus 21,000, if we minus 21,245, how much are we going to get? So 140,000 minus 21,245. It gives us the carrying value according to the calculations. It's supposed to be 118,755 from the calculations, right? And then we need to think about how much was the selling. So if the carrying value is close to 118,755, that's calculated here. What was the selling price? Remember, on the information they told us that we sold it for 100,000. So when you compare between the two, you can see that we sold it below by 18,755,000. So it shows that remember that selling price, I got it here on the information. I got it here. So meaning that we made a loss on sale of that asset. So we would have a loss of 18,755, which is the same as what we have here. You see, so this is how you complete the asset disposal account. Unfortunately, I would have loved to explain more in terms of this lesson, but we're going to have load shedding and I don't want to mess my system because of power cuts. So thank you very much for watching. If you want to have a personalized lesson, please make sure that you book and I'll be able to help you. Thank you for watching. Please remember to share this lesson with your friends and also subscribe to our YouTube channel by clicking that subscribe button on your bottom right, and also leave your comments right there so that I can know your thoughts regarding this. May God richly bless you. Shalom.